So traders, this week has been an absolute beauty for those that have recognized the dollar is strong. Now, even though the markets have been a little bit choppy from time to time, you should have recognized really on this week that the markets were showing strong evidence of dollar strength. And I've spoken about this in one of my recent videos on YouTube, how to identify currency strength. And once identifying a currency strength versus a currency's weakness, being able to then trade based on that for potentially the rest of the week. Now, we knew that the dollar was going to recover at some point. It had been really doing bad at the latter part of 2020, but it's now starting to recover, and we should definitely suspect a lot more volume from the dollar moving into April, which should just make trading really a piece of cake if you're waiting patiently. Today we're just going to go over the pairs that we looked at last week, just see what's been happening, just help you to identify how you could have adjusted some of your key levels, looked at some of the best opportunities, and just figured out the ones we may have been trapped in. So firstly, we're going to take a look at the pound USD. Now, the idea was on the market open, we was looking for buyers above, or we looking sells below here at 38.45. Now we can see once the market opened, it started to chop around a bit. Now, what you want to be doing at this stage is once you start to identify multiple wick rejections here, guys and ladies, you want to make sure that you're moving your key level to those wick areas. Remember, we say you want to see price breaking closing above, or you want to see price breaking closing below. Once you get those wick areas, then you're just waiting patiently. Now, we did identify at the start of the week, especially on the first couple of days, this dollar was strong. It wasn't as part of our plan to be selling it just yet, but the dollar was strong, and we can see that there was a really nice movement to the downside. Now, this was just a continuation of the strong bearish sentiment, lower high, and what do you expect after a lower high? You expect a lower low. Now, we're looking to see how price comes back to this level for a retest to potentially buy it back up to these highs if we're not going to see the break above, which we definitely are not going to see at this moment in time if price is creating multiple wick rejections. So we had that movement down. Pricing came back to this level. Now, once price starts to fail to break this level, you must recognize at this point now that the structure of the market is down. We're clearly making lower lows and lower highs. We have a really nice double top formation here, and there's a very high chance that if price doesn't break it, we'll continue pushing down. Now, that's exactly what's happened. The dollar stayed true to the structure of this market. We can see here the previous trend up was absolutely obliterated. Structures to the left were being violated left, right, and center. And this is just a sure sign that if you're planning to trade, especially pound USD, your best options look for those selling opportunities. Now, from an intraday perspective, the volume in these candles are very easy to trade if you know how to scale down. So yes, you may have been trapped in some of these moves, let's say Wednesday, Thursday. Let's just make sure, yeah, Wednesday, Thursday, because yesterday was a really rough day, and Wednesday was tough also. But if you're trapped in this market, it is what it is. What you're supposed to be focusing on is minimizing your risk, and then you're waiting for price to break below the wick rejection areas. And once you get those break belows, then you can start scaling down to some of your intraday time frames, looking for your retest of structures, looking for your lower high formations, etc., etc., and then looking to take advantage of some of these opportunities. But it was really nice to see how this pair moved last week. There was some really good movement Monday, Tuesday, Wednesday, Thursday slowed down, and then as you can see today, which is Friday the 5th of March, it has really been a nice pair to trade. The next pair we'll take a look at is pound JPY. Now, the market opens here on the 1st. We're looking for price to break close above here, and as the market starts to break above, you can clearly see this is really like early into Sunday open, so not even Monday here. Price starts to form these multiple wick rejections, so you just want to adjust your levels according to the wicks and the bodies. And now you're formulating your plan again. The plan is buys above this level. Once we break close above, which is this your evidence, this is your evidence here of your break close above, or we're looking for the break close below to get out of this traffic area. Once we adjust our levels, we can clearly see that price broke above this level, and as anticipated, we managed to hit our target levels here after the break close above. The ranges from the most apparent candle that closed above was around, let's say, 87 pips to the upside. If you could have identified the strength of the pound not necessarily pound strength, because obviously you would have seen with pound USD it wasn't strong, but we mentioned yen weakness. As you can clearly see here, we have a really nice move to the upside. Great opportunities on this market from yesterday, really strong momentum to the upside, and we tried to break above this level here at 150.32, but we kind of failed. It is what it is, and now I would just say wait till next week. We'll mark up our levels on Saturday. I'll post a video for you all on Sunday for you to see what we're looking at on pound JPY. But nice to see our target buys were reached here. Again, not the easiest of opportunities on Tuesday, Wednesday on this pair, but as Thursday came, we started to see that momentum. Euro yen has been an absolute nightmare. Now what we've identified is that the yen had actually strengthened. So from the market open, we wanted to see break close below sells to our target levels, and this happened early in the morning here. Once price started to create these wick rejections after the market open, you just want to adjust your levels according to the wick rejections, so you account for what's happening here. Now you're saying to yourself, well, once price breaks close below this level convincingly, you look for sells to the downside, or once we break close above here, you look for buys to the upside. So I think this would have been our worst opportunity here. I think we would have disregarded this because of the wicks, but the buys above probably, no, not probably, would have 1000% caused us problems. Euro yen has not been the strongest of the currencies this week, unfortunately, and as you can see, if you took this buy here, it would have just been an absolute disaster. Price is still ranging. The way I would adjust these levels now, if you're planning to trade them next week, will be something like this, but I think this is something we'll go over on Sunday when we look at the pairs. We'll try and get a bias and understand what's happening with the behavior of the other markets and the currencies. But anyway, euro yen was not a performer this week, which is, it just is what it is. Now USDJPY, we did mention that we're only looking to see this continue up because of the dollar strength, yen weakness. This was the market open. This was the most apparent level that started to form on Tuesday. And as you can see, once we started to break close above this level, let's even just say the multiple wick rejection area here, once we broke close above, just as we anticipated, the market continued up. If you were trading USDJPY this week, the only thing you should have been taking was buys. From an intraday perspective, there were a couple sells, and they were really good. But in terms of understanding what we're starting to gather on Monday/Tuesday going into Wednesday, Thursday, you should have already identified that the dollar was strong, and you should have been really just hammering in those buys when given the opportunities. This one's going to be a bit difficult to digest or figure out next week, to be honest with you, because there's no key levels to be working with, but I'm sure we'll be able to formulate a plan, maybe based on a 50% retracement or something like that. But anyway, this was a good move, and I really do hope he was able to take advantage of this this identifying dollar strength. Euro New Zealand dollar was actually a really good mover last week with the sells that we looked at. Now with the structure of this market, we're looking for price to break close above this level. So this is the first. We're looking for price to break close above at this point. As you can clearly see, it has broken closed above. The best opportunity would have been after the break of this candle and the close of this candle, anticipating a continuation to the upside of about 135 pip move. If you're in this buy now, you should be around 60 pips in profit, because this was the only decent break. As the markets opened and started to form these levels here, you're only looking for a break close below, so you would have never taken sells, and sells at this key level you should have never taken either. It would have just been a break below or a break above as we anticipated. And yeah, I mean, if you're in this trade, really well done. I'm wishing you all the best. Hopefully we can get back to some of these target levels. Just to make mention that if you're in this trade, these are some of your management levels that you want to be thinking about, because this is where price can react to. Euro Aussie dollar. Now this is really interesting. Last week we said that we do suspect that we will see stronger euro versus the Aussie dollar. At market open, this really does look like news inflicted, where Aussie dollar may have had some really good news. Could be wrong here, and I couldn't really care less if I am. Point is, this actual move is just a retracement of this whole push here. So just as we had annotated, we're only expecting the market to do this, which was exhaust first. Almost got it bang on here, but we're not looking to take the immediate exhaustion because we don't know what level we're going to be working with. But what we expect the market to do then is create a movement and then come back to respect that level. We then identify that as a pattern, which is a double bottom pattern. You're looking for the first identifying mark of a buy opportunity here. strong bullish candle, stop loss below, and now if you're in this trade, you should be locked in at break even with about 90 pips profit and potential targets back to the upside here for 1 to 2 at around 140 or 64 pip stop loss. Stop loss, take profit. So this was an absolute great move here. Great way we identified the pullback, almost bang on, and that's just identifying a stronger euro versus Aussie dollar. This actual movement has been a strong push phase, violating these key levels, indicating a bullish sentiment, and then just looking for the 50% retracement of this move and a continuation to the upside. So this was an absolute great mover this week. USDCAD, we again saw the exact same thing as we did see there on Euro Aussie dollar. We saw a very strong push phase, absolutely violating key levels to the left, looking for a 50% retracement. And if I may so myself, it was an absolutely great call. We might as well say hit this one on the head here, hit the nail on the head with this one. If we took this trade with an immediate buy, we would have unfortunately suffered a really horrible wick out here. So let's not make everything sound to be so perfect. But if we did take this buy, we would have been absolutely destroyed by this wick. But it's just nice to see these freak moments don't happen often in the market, and if they do, it's just part of your trading. But the 50% retracement was a great call. We're now expecting the market to get back to 27.57, and that's just in light of the dollar being very strong. So really nice move here on USDCAD, and I really do hope you was able to take advantage of some of these and avoid that horrible wick out, which would have been yesterday. This is one of my most favorite of them all. We know that the euro was weak. We can see the structures of this market was trending up, high highs, higher lows. We have violations of structures here. We have lower highs being formed, and at the market open, what we're anticipating the market to do is pull back to a retest level at 21.37 or around that area. We didn't quite make it back, but it is what it is. You know, we respected previous structure. We don't look at this as a singular line. We look at this as an area in the market. I do wish that when analyzing this, I did recognize this as the key level that price could pull back to as well, but you can't always get them right. You know, I'm sure from the knowledge that you have and have acquired over the last X amount of videos that we speak about, because we're constantly talking about the same thing consistently, that this would be now an identifying mark of a beautiful double top pattern that you could then look for a tradable opportunity. If not, you're just waiting for price to break these structural lows, and as you can see, we're looking for price to break lows below here, and unfortunately, I mean, the movement back down after that break would have to be an intraday trade, so a lower high formation sell with a 35 pip range. Let's see if we can jump down to the 5 minute and have a look for one of these. Probably not 15 minute here, maybe not even the 15 minute. 30 minute would have been more difficult here. Best opportunity on this. Oof. I don't think we would have got one from an intraday perspective unless you was prepared to take the immediate entry. But anyway, it's not the point. All the analysis we do, we don't have to take a trade immediately. It would have been nice to on a higher time frame perspective, but it's just nice to see that the dollar is strong and how easy it could have been for you to take some of these opportunities. Next pair we'll take a look at is Aussie dollar USD. Great call again, very simple analysis. Aussie dollar weak, dollar strong. Market open, looking for a 50% retracement back to these key levels. We just missed it shy of, but besides the point here, we're looking for price to come back for a retest, look for target levels here, or we're looking for a break close below. Now we've had the break close below, let's see if we get back to some of our target levels here around 75.82, and if not, then hopefully you was able to identify that price started to form a consolidation. You're looking for the momentum shifts, which is price breaking close below structure here. You're looking for your key levels to be formed to show that the bulls are not making any new highs and structures now starting to form lower low, lower highs, and you was able to take advantage of some of these sells this week. Next pair we'll take a look at is New Zealand dollar USD. I'd like to say congratulations, Rocks, well done. Another great call here, and I say that very humbly, but it's just simple market structure analysis and just a process I stick to with a 50% retracement. Market open, looking for the market to pull back into these key levels here, looking for strong signs of a bearish close, and then stop loss above structure, target levels back down to some of these lows here at 71.48. As you can clearly see, an absolutely beautiful 1 to 2 risk reward ratio trade with 110 pip move, and I mean, just Bob's your uncle on this one, right? If the structures form, they create the perfect retest, perfect patterns and processes, take the trade. If they don't, avoid it. If they don't, scale down and look for reasons to support your higher time frame analysis. And if they're just perfect like this, then I mean, you know it's plain sailing. So I hope you're able to take advantage of this dollar strength, signs of that at the start of the week. Just looking for continuations of this, and from Wednesday onwards, this should have been an absolute blast for hopefully a lot of you. Last one we'll take a look at is gold. Now, we did anticipate sells this week, again, dollar strength. We did want to see price pull back into some of these retest levels. Unfortunately, we didn't get that pullback that we was looking for. From the market open, we had a lower high formation. We have another lower high formation here. I'm not going to tell you how to get into these. I do speak about this a lot, but we're looking for price to trade below the brick wall of the structures. We're looking for multiple wick rejections. Then you're looking for price to create a level where it's failing to break below. So in this instance, this is 12 hours worth of information. Once you get a break close below this level, you have the momentum shift. You're looking to take this trade as part of a continuation to make a new lower low. And once you take this trade, you're just making sure at this stage, once you have your key levels readjusted to where price was at, you're making sure that you have a 1-to-1 risk to reward ratio back to these levels, which you clearly do. And then you can target your 1-to-2, 1-to-3s, or 1-to-5 in some instances. And if you was able to recognize this based on simple price action approaches here, you'd have been able to bank yourself a really nice 300 pip move, and if, whatever the saying is, a 1-to-2 risk to reward ratio trade. So we'll end it on that note. I think personally it's been an absolute phenomenal week. Thursday was super tough. Wednesday wasn't the easiest, but Monday, Tuesday was absolutely gorgeous. Today has been absolutely gorgeous. This is Friday, and I just hope that you was able to take some of the tips and advice that I've given to you over the last however long and applied it to your trading. Hope you enjoyed this video, guys. Have a great weekend. Like, subscribe, turn on notifications if you haven't already, and as I always say, continue to trust the process.